Hi, guys. Thanks for tuning in to another episode of Nuggets News, or our monthly housing and economy update with our friend Martin North, who's coming to us from the other side of the globe in the UK. How are you, Martin?
I'm very good. We're in midsummer here, blue skies, sunshine, very warm. But we're looking at a central bank fest over the next couple of weeks, so lots to talk about.
100%. Well, it's been pretty cold here in Tassie. I think we had the coldest snap on record or something. But the other interesting things that have been happening around the world before we get into your slides, obviously the Trump assassination attempt, or whatever you want to call it. Um, and then him talking at the Bitcoin conference, the Olympic opening ceremony, some craziness going on there. So was saying in the pre-interview that I'm sort of going, geez, have I become the old guy that says like the old days are better, or is the world actually just getting crazier and crazier everywhere you look? And more people are sort of tuning into this kind of alternate media and podcasts and shows like ours to say what's really going on. Something doesn't feel right in the air. So, any thoughts on that, man?
Well, just really to say that all the stupidity on social media, it's harder and harder now to separate fact from fiction, rumor from innuendo. And so it's really, really important to fact check what you actually are seeing and don't believe everything that you see because there's so much misdirection and so many lies out there. And I think some of it's deliberate and some of it's just, poorly aimed. But it's really important to go to those sources that you know and trust. And hopefully, some people who've been following us for some time will know that we've been pretty consistent with what we've been saying, but also basing it up with good data as well.
Yeah, and just on that, with the rise of AI, I saw if you ask Facebook's Meta AI to give you a summary of the Trump assassination attempt, it says that nothing happened. And then if you ask another AI, so we just got to remember, even AI can be smart, but it's only trained on the whatever you feed it. And so if that's got the
Yeah.
political bias or racial bias or whatever, everyone's got their biases. So you've got to be aware that it's hard to get true information.
Spot on. Yeah, it's really important not to just take everything with if it's up on social media, it must be true. Well, actually, if it's up on social media, it's more likely not to be true.
Awesome. Okay, let's dive into these great slides of yours, man. So first up, inflation coming in a little bit hotter.
Yeah, I thought we'd just start with Australia because, of course, the Reserve Bank meets next week. And we've got some data coming out this week on inflation. The expectation is that inflation will continue to be tracking above what the RBA was thinking. And so that first slide just highlights the fact that the trajectory is now way off. If we get a quarterly over 1.1%, that almost certainly confirms a rate rise. If you look at the next slide, you can see there that the services inflation, which is the local homegrown wages related, the housing sector and rents are still driving it quite a lot hotter. And so just to the next slide, the expectation now is that the rate rise is coming. And we've, of course, had lower rates in Australia relative to some other countries. But it is interesting to understand how different now Australia is in terms of where inflation is. It's 2.7% over in the US, and it's similar, just over 2 in the UK. But we're now much higher. And the expectation is that the inflation rate will be about 3.8%, which is way above where the RBA wants to be. So it does now come down to whether the RBA will do what it needs to do to lift rates to try and actually strangle demand, or whether the political pressures, and of course Chalmers was on over the weekend trying to jawbone everybody saying, oh, it's just a temporary blip, it's coming down. But no, the argument I would make is the data is suggesting that things are actually pretty hot with regard to inflation. If you look at the next slide, you can see there that the 2-year yield, which is a bit of a proxy for the cash rate ahead, is above 4%. And that, comparing with some of the others we'll see shortly, suggests, as the next slide shows, that the interbank expectation is still rates are going to go higher. How much higher is the question? How long is the question? But as a result of all that, you've got to expect that households on the next slide are hunkering down. The real spending is going backwards. The discretionary spending is tailing away. But of course, the bottom line is that with all of this is that not all households are in the same boat. There are some doing quite well, some not. But anyway, the expectation must be a rate rise.
Yeah, that's going to be particularly politically unpopular compared to other countries that have sort of battled through it, and then they've got the cut, and they maybe think, oh, things are finally going to get easier. Whereas Australians are really struggling because the housing market and whatnot. It's going to be headlines and really hurt a lot of people. Almost that capitulation moment for people that are on the fence of
And the latest data suggests that home price growth is easing or falling in some places, Melbourne in particular, and the number of forced sales are rising. And this next headline here shows that struggling homeowners are going deeper into debt in a last-ditch attempt to avoid selling. And my analogy is this race which households have been on, which was expected to be a relatively short race because rates would drop, is now turning into a marathon. And the longer this goes on, the more households are pressurized. And what that basically means is that more and more of households' incomes are flowing in to effectively support the mortgage or the rent. And yet, interestingly, on the next slide, and this is another reason why we might see interest rates rising, is that investors are actually now piling back in. So while some investors are being forced to sell, and we're seeing a lot of forced sales, particularly Melbourne, from investors, there are other investors now beginning to pile back in. And the net result of all that, if you go to the next slide, is to see that how much income do you need to have to get an average property? Well, in Sydney, it's $238,800. In Hobart, it's $132,000. Those are huge, huge incomes relative to the average. So whilst home values have gone up, the truth is that things are looking pretty shaky now.
Yeah, we might talk about that rise in the investors when you talk about what we can maybe do in a few slides' time as well. But moving on now to the dwelling price to GDP.
Yeah, so just to show you, it comes through in the data too. So if you look at the ratio of dwelling price to GDP, then you can see that we're actually way off where we used to be. And if you look at the next slide, there's your problem. It's actually that real housing prices versus real wages. So in other words, if you adjust for inflation, you can see there that real wages have gone almost nowhere, right? Since forever. But real house prices have gone way off the scale. And what that just means that more people are having to extend themselves dramatically to be able to buy anything. And in some cases, they're buying probably not what I would call Class A properties. Sometimes we'll call those lemons, perhaps. People are buying almost anything. First-time buyers desperate to get in, trying to get out of the rental sector because rents are still rising too. And that translates, if you look at the next slide, into the mortgage stress data that shows that rental stress, 77% of households in the rental sector struggling with cash flow. More than half of all those with a mortgage struggling with cash flow. And whilst the RBA keeps saying, well, it's fine, it's only a small proportion, this small proportion is getting really quite big. And in fact, I made a show just on slide 14 there, More Household Trouble in the Land of Oz, which went through this in quite a lot of detail. So if people want to get into more detail about what we're seeing, check out that on my channel. The point there is that this is now getting serious. And unfortunately, I don't see a way out for the RBA. And in fact, go back to the RBA on slide 15 there. They said that some households with mortgages are affected. There's a lot more leverage now, but you got to decline in inflation. You've got to squeeze inflation because that's going to benefit all Australians. So effectively what it means is that those on this highly leveraged path, those with cash flow pressures, are right at the front there. And that's a real problem.
Yeah, and did you want to wrap up, and then I'll share a few thoughts on what we can maybe do in Oz, and you've got this nice slide here about vacant properties.
Yeah, this is another thing. I've been banging on about vacant properties for forever, really. The census a few years ago came out with more than 1 million properties not occupied. And a few other people now have started to home in on this. And in fact, you can see here in this chart that we've got, in Melbourne, for example, there's about 97,000 vacant properties. Now, they're measuring it not the way the census did, which was basically no census response or a vacant census response, but through the water usage. And what that means is that if you've got a property with no water usage, chances are there's nobody living in it. And they've discovered that in and around the centre of Melbourne, there's around 97,000 properties that are effectively, potentially vacant. Now, if you scale that across the country, we get quite close to our million. Now, of that million, some will be people moving Airbnb, second homes and things. But there is definitely a question here about what you do with regard to the vacant sector. And I think this is something that people should be focusing on much more. Of course, people who say, oh, it's my property, I can do what I want. Well, actually, if you decide deliberately to buy the property and hold it vacant, like in Docklands, for example, or in Hurstville in Sydney, then I think there's a question, because this is an unutilized asset that should be utilized. And I believe that if governments were serious about tackling some of the housing situations, they should be looking at the vacancy question.
Yeah, I think it comes back to that. But is it a basic human right to be able to have some afford a shelter and an average home in that country, particularly if you have a full-time job? And I don't know how you introduce some sort of rules around, well, if an investor wants to buy another house as a property, maybe they should be paying a higher interest rate than someone that's just trying to have somewhere to live. Do we need to crack down on overseas investment more, or whatever? These people that have this house that they might not even use once a year, and it's stopping a family that then ends up being homeless and not being able to get a job and pay their taxes. You really have to zoom out and look at all the other flow-on effects if someone can't just afford somewhere to live anymore. So, yeah, any thoughts on that?
Well, I believe it's human right, absolutely. How finding somewhere to live shouldn't be just based on your ability to earn massive amounts of money to be able to pay for it. The other interesting observation is, New South Wales over the weekend announced that they're actually extending the period of notice to 3 months from 2 months for people who are actually being asked to move out on effectively no fault evictions, which is interesting. And it's interesting. There's now a debate whether, in fact, high-rise properties with a view should actually be charged higher rates. They're trying all sorts of things to try and solve this here housing problem. But high migration is the real root cause of the issue. Lack of supply, also a lot of builders going bankrupt. All those things are there. But the trouble is that the governments are not actually thinking broad enough about this problem. And that's why I'm saying I think vacant property is one of those things that should be on the list. Yes. And we've got to change the paradigm, I think. For me, property is not just an asset class, like investing in stock markets. It's somewhere to live first. And I think that needs to be back in focus.
Yeah. I've just got a couple of slides here I want to show people at home, Martin. And this is just the per adult real economic growth. The share of the growth is a percentage for the top 10% versus the bottom 90%. And so back in the 50s and 60s here, you can see that the bottom 90%, we're getting 96% benefit of the economic growth, versus today where it's the top 10% are getting 93%. So I know a lot of Aussies are going, geez, even a decade or two ago, we were the lucky country. And now you compare the current situation to other countries. So Australia here, 93% goes to the top 10%. And we, people say, oh, it's just as bad in Canada and the UK and whatever, but it's far more even here with, 40, 30, 40%, a far more even spread. So I just wanted to show for people at home that if you're feeling that inequality problem, it is really, really severe in Australia, even compared to these other countries that have a lot of debt and have had house prices go up and all the same problems that we're suffering. So, yeah.
I think that's right. And all the information that I've got suggests this K-shaped economy. So there are some still doing very well. If you don't have a mortgage, if you don't pay rent, if you've got savings, you're doing well. But if you're not, then effectively things are much, much more adverse. And it's got a lot worse. Like we said, real income not growing, cost of living still rising dramatically. And, inflation may be lower than it was, but that still means that prices are a lot higher than they were. So a lot of people are hunkering down, spending a lot less than previously. And unfortunately, the lucky country has, I think, lost a lot of its glisten at the moment.
Yes. All right. So let's move on and have a look elsewhere around the world. Do you want to explain this one for people at home? UK election, 1/3 of votes gives 2/3 of seats.
Yeah. I don't want to go into this in too much detail, but just to say that there was a massive swing to Labour in the election, and they got a massive number of seats, but on 1/3 of the votes. Now, we have a different electoral system in the UK, so it's not proportional. But what it means is that we've now got the party in power with a massive majority, so they can do a lot of things. And they're coming out now and saying, oh, the economy is much worse than we thought. We got a £20 billion hole, so we're going to have to cut back on some of our spending. We may have to put taxes up. There's a surprise. Yeah. And in fact, the way to look at it, look at the next slide. This actually shows you that the Labour votes this year are lower than they got compared with 1997 or back in 2017. So although it's a landslide, it's not really a good story in terms of support. The total turnout was quite a lot lower. So we have a government now, a Labour government, who is very much focused on trying to sort of deal with some of the issues that they see. But they've got the same problem. They've got massive debt to GDP ratio, about 100%. They've got considerable issues with poor public services and everything else. Inflation is coming down. So the Bank of England meets shortly, and they're probably either this month or next month will take rates down. And if you go to the slide 19, you can see there that the 2-year bond in the UK, remember I said that the indicator of 2-year bonds is quite helpful in terms of understanding the trajectory of interest rates. Comparing Australia, which is going up, this is going down, right? And so the 2-year expectation is that rates will be lower in the UK now. And that may help a little, but there's a huge problem. And just on the next slide, I also included the FTSE here, because what's happened there is we had a significant peak, particularly after the election and through the election campaign, but it's now gone a bit sideways. And so there's a real question as to whether the UK economy can pull itself out of its 15 years or whatever it is of bad process. But the interesting observation is that democracy is sort of working, but not very well.
Any thoughts on that voter apathy, Martin, and low turnout? Is it sort of like in contrast to the US, where it's just become almost like, or literally these celebrities? And the other thing I'm noticing, a lot of people waking up to this idea of the uni party. It doesn't really matter who gets elected, because it's just, the campaign donation switched to them, and it's very hard to make change. It's the big, the players and the wealth behind the scenes that's really moving the strings of the puppets.
Yeah, so it's quite clear to me that one of the issues is that we've got a lot of smaller parties getting a lot of votes. The chart I showed you earlier on showed that a lot of people are voting for other people because they see that both major parties are dancing the same tune. They're not that as far apart as perhaps people thought. And certainly in the UK, there's a huge amount of skepticism about whether politicians actually care at all. And same in Australia, really. I think I'm not sure it's apathy. I just think it's frustration from a lot of voters who actually believe that really neither side of politics cares about ordinary people, ordinary businesses. They're very much locked in step with big business, and locked in step with some of those international forces that are coming through. And I always come back to places like the World Economic Forum and the
Agenda 2030 and all this kind of stuff. One world government.
Right. Yeah. So there's a lot of top-down stuff coming, and I think that my observation is a lot of the political system has completely disconnected from ordinary people, and in some cases they just don't engage at all, and worse, sometimes they tend to sort of get caught up in this social media, spew that's there, and so they start then going into weird areas where in fact what you're seeing is deliberately manipulated messages to try and actually force people to react in a particular way. And social media, of course, reinforces that because of the algorithms that are used. So, if you've started looking at what Trump said, you'll get a lot more Trump stuff, and your universe will effectively shrink to become effectively an echo chamber for Trump. Now, that's what's happening at the moment. So there's a real question as to how democracy is actually interfacing with ordinary people's lives, and to what extent politicians really care about what's going on for real people. I think that, and by the way, their central banks are a bit the same, they've got this sort of fixation about what they're doing, but it's not relevant to ordinary people. And I think that's the biggest problem that I see at the moment.
Yeah, I agree. And really important for people to understand that thing about social media these days, and how it can drive you down particular rabbit holes and paths. And even, we know that the governments or these big businesses or these powers can spend money to run these campaigns to get you to start down these paths and rabbit holes. But particularly, it's just trying to divide everyone on every issue now. And then almost in certain places as well, get you angry and angrier to the point of radicalizing people. And that emotion really comes into it when everyone feels that they're divided on every issue and different, rather than all proud of their country, or even the fact that just we're all human beings on a planet. We should try to get along. But yeah,
We've only got one planet, and
yes,
we're not treating it very well at the moment. And look, on the social media, if you go to the US, of course, we had the Trump thing, and then we had Kamala coming in. Now, my observation here is that markets reacted quite significantly when it appeared that it was going to be Trump v Biden, and Biden basically was falling off the perch pretty much. The markets went one way, and then when Biden pulled that back and we had the replacement come through, it's moved dramatically. And so the latest polls in the US suggest that it's pretty well balanced between the two parties now. And it's early days. The Trump message, of course, is having to be recrafted because Kamala's different to Biden. You can't just say he's old. In fact, now Trump looks old. So it's actually quite interesting.
Do you believe the new polls, though, Martin, showing that it's like a couple of points difference between the two? Like, I think Trump's ahead by a mile, to be honest.
It's difficult to know. The latest polls that came out over the weekend in the US were actually showing line ball, particularly in some of the swing states. And particularly, it showed that there were alternative paths. So because of the way that the votes work in the US, you need a number of particular states and a number of particular votes in those states from the delegates. And in fact, Kamala now has basically more paths than Biden had to victory as well. So it's too early. Only 100 days to go, so we'll know relatively soon. But I think we're going to see a lot more, messing around. And of course, the issue of the border will be a very significant one.
Yeah.
Both sides, though, don't seem to me to be that worried about the high levels of debt in the US, and that's a big issue. And of course, there's some interesting stuff going on when everybody's chucking social media and telling lies about what the other side said and everything. It's going backwards and forwards. It's a mess, and it's highly polarized. So hard to know. And I'm not even sure whether the polls actually know.
Yeah, I was going to say the decentralized betting markets barely budged, but the media-run polls or whatever even right up. So that's an interesting point for people at home. But moving on.
So if you look at S&P 500, of course, it hit a peak and then it's dropped back. And that drop back was partly because of this shift in politics, partly because Trump came out and said, well, Taiwan needs to pay for its own defense. And that had a big impact on some of the tech stocks and semiconductor indices. We then had some of the tech stocks reporting results which were okay. But Google, for example, is spending a massive amount in terms of CapEx, but not necessarily seeing any revenue coming through from its spend on AI. And so it started to beg the question, well, are the AI stocks overextended? Is the return of investment on AI everything that expected? So we've seen the, markets come back up a little. And interestingly, if you look at the equal weight in the S&P 500, there's been a swing away from high tech into some other areas. So the question is this a real rotation or is this just a temporary blip? But it looks to me as though some of the tech stocks are pulling back quite a long way, and we'll see that in a second. But then you've got to say, well, what's happening with inflation? So Powell on slide 24 said, we want to see more good inflation data. Of course, we'll get inflation data this week. We had some inflation data on Friday, and we've got the Powell that is coming this week, with the next decision. Most people are expecting that they won't move this month, but potentially next month, although some people have now been suggesting that with the economy where it is in the US, and the signals are mixed, if you look at, for example, the jobs market, it did appear to cool. There were some revisions, and we're seeing a lot of revisions in the data, which is always difficult to read. And I think we're going to see more of that. And then the data that we got at the end of last week was that the PCE, which is the one that feeds into the Fed's decision, well, it was up a bit, but not necessarily dramatically so. So people could interpret this information whichever way you want. Some people said, oh, I see, it's all going high. Others saying, no, it's fine. So we'll have to wait and see what the Fed does. My expectation is that they will not cut rates this time, but they will position for a rate cut in September.
Yeah. All right, next up. So debt issuance. And I think we've, ticked past 35 trillion now. I just checked it before we started recording.
Keeps going up. And it's interesting that they were actually issuing a lot of short-term bills. And what I think they're trying to do there is to manipulate the yield curve a little bit. So that's a lot of people are now believing that this is unsustainable. But, frankly, we're around a 100% GDP to debt at the moment in the US. Some people are saying, oh, you can go to 220, not a problem, so there's maybe lots of headroom. Neither side of politics really wants to deal with this critical issue. And in fact, some will be suggesting that if Trump were to get in, then because of his thought around tariffs and because of his thought on essentially controlling the central bank, you might well see inflation running a lot faster and harder. And some of the stocks were trying to pre-position for that when it was looking as though Trump was likely to lead off. Now, not quite so sure, but neither side wants to talk about the debt issuance and how to deal with the debt, and that's a problem. And eventually, at some point, it's going to come unglued, but the chances are it won't come unglued anytime soon because there's still some fiscal headroom, according to all the experts.
Yeah. Yes. Very interesting stuff, and we'll get to some Bitcoin stuff because Trump has been talking about that a little bit in just a few slides. But you've got the Nvidia chart for us now.
Yeah, I just thought just on Nvidia, just to say that it went off its highs. The question is it now overvalued? It is multiple times overvalued compared with current cash flow, but the expectation is, of course, more cash flow later. And just on the 2-year rate. Again, it's interesting to see the trend down considerably. Compare that with Australia when it was very different. So once again, it looks as though the markets are expecting rate cuts sooner in the US than, say, Australia. But all to play for. Markets completely uncertain, a lot of volatility. Remember, September and October are often times in the year when markets do adjust down. And I do think that September and October could be quite significant this year. And of course, then we got the November election in the US.
Yeah. All right. So moving on over to China and Taiwan.
Yeah, just to say that the machinations over Taiwan continues. They seized a boat there, and China's also been hit with the EV duties, thanks to the EU. China, of course, is struggling. They had a big conflab a couple of weeks ago, and people were expecting big announcements. Almost nothing came out. So a lot of people are now suggesting that China is sitting on the sidelines, waiting for the result of the election to see what they're going to do. Meanwhile, the property sector continues to go down. They are hoarding some minerals and some resources. And so the demand has been somewhat higher than some expected. But if you look at the stock market, you can see there that the CSI 300 is significantly down. And nobody can see a way for China to really turn things around. The latest growth was a bit weaker than expected. So it's a bit wobbly.
And just to note, the China and EU in these talks over the tariffs, the proposed tariffs by the US are far higher than the tariffs from the EU that are causing all these negotiations at the moment. So it's going to be worse when it comes to that roundtable.
Yeah, and remember, folks, tariffs equal higher inflation because somebody's got to pay.
Yes. All right, Martin. So Bitcoin, do you have any thoughts you want to share on this?
Well, only just it was interesting because at one stage Bitcoin dropped below 59,000 US, and that was obviously to do with Mt. Gox, where they started feeding that payout in. But if you look at the slide now, it's up to 68,000, give or take. So, and a lot of people are now again saying, well, there's still opportunity for upside. Some of it significant, others saying, no, there's not much to see here. But I thought it was really interesting how Trump engaged with this, and he spoke at the Bitcoin conference and wanted to highlight that the US could be a center of gravity for Bitcoin. Yeah. So quite interesting. What did you think?
Yeah, I thought he said on day one, we'll fire Gary Gensler, and the crowd erupted, and he said, I didn't know he was that unliked or whatnot. But yeah, I think the other, Camilla Harrison, they're going to have a tough time because at the moment they're going to try and change their tune in these last couple of months and say, hey, we're crypto friendly too. But really, the Biden administration has been awful to crypto for years and years. So I don't like the chances of repairing that. But I do like Trump and others have talked about a strategic Bitcoin reserve. And this is something we've been talking about with companies like MicroStrategy that have added Bitcoin to their balance sheet and saying that countries are going to do this and individuals should do this, particularly if you're in a country with monetary uncertainty and political uncertainty. So it just seems that we are slowly getting there, Martin. I don't think Bitcoin's going to be $1 million in 2 years' time if the US were to adopt that policy, but I think it's just this slow grind. As long as money, inflation, debt's out of control, and more and more people are going, well, you know what, maybe we should keep some of our savings in something that has a lower inflation rate, and that's all they know, then I think that leads people down the path of why Bitcoin might be better money. Yeah.
Well, it's certainly going to be interesting to watch. I think the next year or so will be fascinating to see where we go, having gone through the halving and everything else. The other point, of course, is that people are looking for safe havens at the moment, given the fact that the US markets may be a bit wobbly. And so the question is, do you go gold? Do you go Bitcoin? Well, some people are going Bitcoin. Other people are going gold. So the gold price is relatively high at the moment. And that's quite an interesting observation. It's fascinating to me that as inflation comes down, gold might actually change a little bit in people's perception relative to currently.
Yeah.
On the other hand, treasuries are still quite strong at the moment, and it's worth highlighting the fact that the yield curve is morphing a little bit. And so we could well see higher interest rates further out. And if that's the case, that again may change the complexion of where safe haven is. Yeah. And at the moment, my observation is it's hard to find any safe haven. So, I think people should be a little cautious and just watch and wait to see how some of these things play out. Final point, just to sort of complete the picture, of course, crude prices dropped recently, but now we've got the Middle East situation bubbling up. We had those attacks over the weekend, concerns now about a wider conflict in the Middle East. If that happens, that's going to potentially put upward pressure again on oil prices, although now production of oil in the US is higher than it's ever been. And in fact, the US is a net exporter of oil, which is quite interesting. Yes. So it's going to be fascinating to watch some of these things. So I guess as I sort of stand back and just sort of try and make sense, I think we're at a very uncertain time. I think there are lots of future uncertainties that will play out in the next few months with the US election and also some of these other international conflicts and things going on. And the volatility will continue, I think. I'm not sure we're going to see new highs anytime soon. And I come back to my September and October window where markets tend to be quite wobbly. And I think we're going to see some wobbliness around as some of the political machinations continues.
Yeah, so I guess I'd just like to tap on there, Martin, that if you don't know where to invest, you can always invest in yourself and your own education and staying on top of these issues and thinking, well, is it better if I really relocate somewhere else, whether that be within Australia or another country, or free up some capital from the assets you do have? Give yourself that education optionality to keep yourself ahead of the pack no matter what happens globally. But
yeah, I think you can't rely on governments to save you. You need to have your own plans and you need to have your own thoughts in order to be able to, keep some flexibility there. But also don't just take holus bolus what you see on social media as truth, because so many people that I come up against are completely distorted in their thinking simply because they're not actually understanding some of the realities versus what people are actually being exposed to in the socials. And I think that's an important thing too.
Fantastic. Well, guys, as always, links to Martin's channel are down below. If you want to head over and find out more about crypto, you can head to nuggetsnews.com.au. But otherwise, we'll see you guys again next month. Thanks a lot, Martin.
See ya. Take care.
Cheers, guys.